very interesting developments here. Nice trend day, closing near the highs, right inside this low usage area, opening back. Like, see, it opened so close to the first distribution. This basically like means that it rejected almost all of yesterday, right? It looks like that. But then what? Then something more interesting happens. We again start trending higher. We get range extension, IV range extension, everything to the upside, and we are again moving back up. So, I mean, this is really really interesting, developments that are happening on the charts. Extremely volatile, and usually whenever such developments are happening, it is a clear indication of shorter time frame traders in control. Although such huge price progress will make you think that higher time frames are involved, because a lot of price progress is happening, but it is all happening within a consolidation, and these are those special circumstances where price will mislead you greatly. Anyone who's thinking that very high time frames are involved here, they are if they hold their longs here, they are killed in the opening. If they get out of their longs here looking at a sharply lower open, they are cursing themselves because market has almost recovered everything back. So these kinds of things are happening because shorter time frames are in control. Higher time frames are doing their job, but behind the scenes they cannot trade in such thin markets. They need a lot of price action. They need nice composite profiles, to establish their positions. Unless and until we get these kinds of composite profiles, smart money is not going to get a chance to establish their position, because the moment they start buying in such thin markets, they will get even sharper price progress. So that is the reason why I don't think that smart money or higher time frames are involved yet.